The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. The U.S. dollar has long been the undisputed cornerstone of the global financial system. Yet today, this long-standing dominance faces new challenges. Geopolitical tensions, shifting economic power dynamics, and rapid advancements in financial technology are fueling a gradual but noticeable move toward de-dollarization. Countries and institutions are increasingly exploring alternatives to the dollar, such as the euro, Chinese yuan, and digital currencies, to diversify their exposures and assert greater financial sovereignty. This evolving landscape raises important questions. How significant is this shift away from the dollar, and what does it mean for global markets and investors? And ultimately, is the era of a dollar-centric world coming to an end, or is this simply an adjustment within a resilient system? Well, to find out more, joining me now here in the studio is Gautam Chadda, who's the head of Strategic Advisory Asia at RBC Wealth Management. Gautam, welcome back to the show.
Thanks so much for having me. Good to see you.
Thank you so much for joining me once again. Well, Gautam, although de-dollarization itself is not a new phenomenon, recent developments may have undergone a qualitative change. So how would you define de-dollarization in today's global financial landscape, and what are the main drivers behind this trend?
Yeah, I think this is a really good point. And de-dollarization for us at RBC Wealth Management would be the process by which countries decide to reduce their reliance on the US dollar in terms of international trade, finance, and as part of their FX reserves and currency reserves. So the aim is to reduce the risks of being overly exposed to the US dollar. And some of those risks could be the threat of US monetary policy having an impact on the value of the assets you're holding, potential for sanctions, which we've seen, and also the potential for currency volatility. But let's also make one thing absolutely clear. De-dollarization in itself doesn't necessarily mean that the US dollar is going to fall in value.
Okay.
They may be related, but they're actually different things. And so the act of de-dollarization from a country's perspective is really to reduce their dependence on any one sovereign country, in this case, the US.
Okay, so how significant is the shift away from the US dollar so far? Are we seeing a tipping point or just the beginning?
Yeah, so it's already started some time ago. When we look at central bank reserves in aggregate, in terms of global central bank reserves, in 2010, the US dollar made up approximately 65% of those reserves. Towards the end of last year, early part of this year, that number came down to 58% of global reserves. So you can see that de-dollarization to some extent has already been happening. So it's something that's already been set in motion. The one thing I would point out is, from our perspective at RBC, we see over 50% of reserves, almost 60% are still held in US dollars. And so the US dollar still has a significant role to play as a reserve currency today. But the starting gun has definitely been fired on de-dollarization, and we expect it's a long way to go from here.
Okay. Well, earlier you mentioned that de-dollarization and the decline of the US dollar is two separate matters. So is the current de-dollarization a real threat to the market?
It's interesting. If we think about de-dollarization, it almost sounds like a naughty word or a difficult word. But actually, what it's looking at is having a more balanced portfolio of, for example, reserve assets for any one nation, rather than a reliance on or concentration into one currency. So from that diversification perspective, actually it makes the system less volatile and is less of a threat. However, the threat is going to come from the fact that when large market participants such as central banks, they hold US dollars, they don't hold them in a deposit account. They'll normally hold them in marketable securities. And the number one marketable security they will hold is the US Treasury. So with fewer dollars held, the question will be, where does the marginal demand for buyer for the US Treasury come from? And at the moment, we're seeing domestic savers in the US increase their Treasury holdings and pick up the slack. That's probably where the threat will come from at some point.
Okay. I mean, some countries have actively started diversifying away from the US dollar in trade and reserves, while others still rely heavily on it. Which regions or countries are leading this push towards de-dollarization, and what motivates their decisions? markets?
I guess the global south are really leading the way with the move. And from a central bank perspective, certainly, the Russian central bank was cut off from the SWIFT system. Many central banks started to reduce their use and ownership of US dollars at the margin. They wanted to hold safer assets that aren't controlled by any one nation. So they're not creditor. And so from that perspective, these countries feared that if the US saw them as a threat or an unkind actor to the US, they might have the access to the US dollars and the SWIFT system being blocked, just like it was with Russia. And the one choice that central banks have taken, the number one choice, has been gold, which we've spoken a few times before, but gold has become the number one choice of central banks buying in to replace some of the US dollar, simply because of the lack of ownership of any one government. Gold doesn't really carry any counterparty risk.
Right, definitely. I mean, the rise of alternative currencies as well, especially the Chinese yuan and the euro, is often cited as a key factor in challenging the dollar. How is the increasing use of currencies like the yuan or the euro reshaping global trade and finance?
I think in two ways, actually. From what we've seen at RBC, it's that the pickup in trade settlement in non-US dollar currencies has been quite stark. So trade agreements, for example, between China and Russia or between India and the United Arab Emirates are increasingly settling oil and commodity transactions in non-US dollars, where they would be settled in US dollars before. And what they do is settle in non-US dollars, but then it's backed up and converted to gold at the end. We're likely to see that to continue. So commodities with net settlement of balances in a neutral reserve currency, and gold is playing that role. But when we look at potential candidates for alternative currency assets, or reserve currency assets, from the euro's perspective, there are a number of issues here. So one is that Europe hasn't really got a unified fiscal framework, so there's a real question mark about sovereign risk. Additionally, the Eurozone has multiple sovereign bond markets. The German Bund is very different and viewed very differently with different dynamics to maybe the Spanish government bond market or the Italian. And so it's a little bit more complex for investors to have to navigate. There's also political complexity. 20 countries or so in the Union all coming out with unified policy. It can be slow, laborious, and sometimes policy doesn't come through. And lastly, they've got much smaller financial markets and less integrated versus the US. So the Eurozone has got a long way to go to fix some of these issues before it becomes a contender for the US dollar, and that's not likely to happen. In the case of the renminbi, China maintains tight capital controls for the currency, and so the lack of international convertibility will really hold back international investors from holding that as a reserve currency. So that's kind of not really going to go too far until that changes, which we don't forecast at this stage.
Okay, very interesting. Well, overall then, Gautam, what implications does de-dollarization have for global currency markets, especially in terms of volatility and liquidity?
The significant impact is likely to be the growing importance of gold as part of the global monetary system as central banks continue to buy more and more of the yellow metal. So for the last 3 years, the central banks globally have averaged 1,000 tons of gold per annum in terms of buying, and they're price insensitive buyers, which means that even though prices have kept rising, they'll continue to buy more because they're not necessarily always just looking for a financial return. They're also trying to offer systemic stability for their monetary systems that they're responsible for. We think that's certainly one of the key points. In terms of the broader FX market, some of the traditional drivers that impact liquidity and volatility will remain in place, such as the future expected path of interest rates between economies and the differential there, the perceived independence of central banks, in this case the Fed, from the government, policies such as fiscal policy, monetary policy, trade policy. There are a number of unknowns out there, and that's probably causing much more of the volatility in financial markets than just de-dollarization on their own.
Okay. Then conversely, are there new opportunities in markets or asset classes that investors should be aware of as de-dollarization progresses?
Absolutely. And the one key thing is to talk about diversifying away from just US dollar concentrated portfolios, making sure that at least some element of an investor's portfolio is out of the US dollar, and currencies that we like other than gold, which, you know, we're big fans of at RBC. The non-US dollar currencies such as the Japanese yen, the euro, and the Canadian dollar all present good options for investors to diversify into.
Okay. Well, you've said previously that we will move toward a multipolar world, less reliant on the USD, while others think the dollar will remain dominant. What are your views? I mean, is a multipolar currency system realistic in the near to medium term?
I think we're already there. To be honest, when we moved from central bank reserves holding 65% of US dollars to 58%, we're already heading to that direction. The question is, how far can we go? Because the US dollar still has a huge role to play in terms of the depth of capital markets, the sophistication of the instruments within that, a whole range of other factors that will keep it prominent for some time. And the lack, as we talked about with the euro, lack of credible alternatives as a reserve currency. It really comes down to having a diversified portfolio, but no longer, if anybody was concentrating in US dollars, certainly now and going forward will be the time to reduce that concentration.
Well, given all your insights here, of course, de-dollarization is something we cannot overlook. So, Gautam, what signals or market indicators should investors monitor to gauge that impact of de-dollarization?
From de-dollarization, ultimately it comes from a country and a government perspective. And therefore, when we start to see the reserve managers, the central banks of these countries diversifying out of US dollars and holding other assets, such as gold, which has been the biggest one, that will be something to monitor on an ongoing basis for investors. The other one is that the flow of trade activity outside the US dollars. So this is where trade, for example, in commodities, typically conducted in US dollars, regardless of what your base currency is. And now we're seeing that trade in some commodities is happening outside the US dollar. If we see that trend in bilateral trade agreements or multilateral trade agreements happen, excluding the US dollar, that's also another signal to watch to see how this trend in de-dollarization is evolving in the coming years.
All right. Well, are there any specific risks or surprises investors should be prepared for as this trend unfolds?
I think so. Our view in the near term is that, having said all this, that in the near term it could be a pop higher in the value of the US dollar.
Okay.
Because it's gone a long way in a short space of time, and then there's potentially some positioning on the short side, maybe excessive positioning. But also we've seen a little bit more resilient data coming in. Rate cut expectations have been tempered slightly, so expecting slightly stronger dollar in the very near term, but over the next 18 months or so, we continue to expect weaker US dollar against other currencies. And the big risk is really being biased to just one currency, such as the US dollar. Investors having a diversified basket of currency exposure as well in their portfolios is really the best way to mitigate that risk.
All right. Some great insights about de-dollarization and the US dollar there. Thank you so much, Gautam, for joining me today.
My pleasure. Thanks for having me on.
Thank you. That was Gautam Chadda, who's the head of strategic advisory of Asia at RBC Wealth Management. This has been the Wealth Tracker with me, Hongbin, Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.